Yeah, it's tough. It's tricky when you have a trading range. When if you swing, the whole saying buy low, sell high, and scalp. You know, always in is fantastic for swings in a trending market, but very difficult for trading ranges. So, also an always in trader, just to make sure we're on the same page, would be here's a good example. Bar three, always in short. Stop below two, don't get out. Possible wedge, maybe you get out, but you get back in here. Maybe you get out here, short again here, short again here. Maybe you get out here, sell this close. So you're only staying in which, if you had to pick a direction, long or short. So you had to buy at the market, long or short. Whichever direction you pick is the always in direction. Now, so for instance, here, higher low, major trend reversal, wedge bottom, trend line break, higher low, double bottom, probably always in long. So you buy and put your stop down here. Maybe, some traders will get out here, but probably the second leg up, breakout, probably a little more up. Maybe you get out here, maybe you get out here. Always in traders probably got out here, which explains the sell off. So, anyways, back to your question about USD, Japanese yen. It's tricky. Is it always in long or short? Well, kind of goes back to the whole you get a breakout, but then once the market starts, probably more up. If we are not looking to the left, this is probably exhaustion, which it was. So let's ignore all this to the left. Start to go sideways. There's odds still favor more up, but once you start getting this many bars sideways, probability goes down. So it gets more and more 50%, which is why you have a breakout mode. That's what creates a breakout mode. So, anyways, somewhere in here you're probably always in short, but possible exhaustion within a trading range. Decent buying pressure. We tested back to these closes. So bears could get out. You get a double bottom. We may get a bull breakout of a double bottom. Bull breakout of a bear flag. So here you're probably always in long. Just buy, stop below, take a walk. Or buy that close, stop down here, go for one times. A lot of traders did that. So it's not clear, Is it always in short here? Well, I don't know. We're still, we're still above here. We're still above the price where it became always in long. If you think about it, it's kind of interesting. If let's say the market went always in long here, if you really think about it, this was a test of the always in price. And bulls bought it again. Here, bear breakout strong enough for a second leg down, which here we got our second leg down. However, sorry, I just need to check on this. Right here, we're not. This is interesting. Think about scaling traders for a minute. Let's say I buy this close and I have a stop way down here. Yeah, let's say my stop's down here. I bought this low, maybe I bought this low.
So what happens at
So,
bar 47?
so let's look at this. You buy this low, stop down here, and you're looking for a place to, maybe your stop's anywhere down here. Who knows? So I buy this low, my stop's down here, maybe down here. And I'm going to look to add on a position. A common way to do that is to look for a stop entry. So, and that's exactly what traders did. Buy anywhere up here, get a pullback. We're still always in long. Here's a stop entry. So we'll just start with this close right here. Let's say, strong enough, 2 bars, we'll probably get a little more up. I buy this close. I add on lower. Look right here. You know, the reason this happened is bulls bought this close, they scale in, they add on to their position. Their average price is right here, around 120.70. So, you know, you have to see it as what are they going to do? They're going to get out break even. They're disappointed. They know the odds favor second move down. So, back to what I'm saying here. You know, if you think about it, let's say you didn't buy up here, you get this pullback, and now you get this bar. What's the probability price gets at least to here, the average entry price, or maybe back to this close? So if you're, you know, thinking about it, it's always in long. You still have scaling bulls looking to get out.
6 bars in.
Okay, so scaling bulls. It's real simple. Buy here, scale in, get out here. So it's a reasonable buy for a test back up to here. And notice what happened. When we get back to this price level, bulls are able to get out. They probably were just barely able to get out. So, okay. Anyways, there's your second leg. You know, same thing though. Bulls buy this, or they buy this low, scale in, get out. Bears sell this close, sell down here, sell this stop, scale in, get out. It's trading range. You know, trading ranges are very forgiving. If you bought anywhere in here, scaled in, could have gotten out. That's why scaling in is such a strong thing if you can do it. So, and that's exactly what makes. So I hope that makes sense.
This is where that stuff.
All right. Anyways.
Remember, Shay's a.
Sorry, I keep pausing the video frequently. I'm having to. Since it's during the day, I'm trading, so I'm kind of having to watch over my stuff as well. So I hope this all makes sense. You know, buying up here, bulls will scale in. That's what creates this pullback. And the bears know that, so they know the odds are they'll sell higher. The odds are it'll go higher, so they'll sell higher. So, okay, good. This is okay. So your actual question has to do with what I'm talking about. So right here, bulls are going to buy, they buy up here, they add on, they're going to try and get out at their average entry, so break even on the entire trade. Some will try to get out break even on their first entry with a profit on their second. That's what creates this tail. It's average price. Pull back, we test back down to here. Bears sell this close, they scale in because they know bulls will sell out of their average price. That's what creates a double bottom, a strong breakout. And I know what you're thinking. You know, you're thinking, oh boy, it's always in long, I gotta buy it. It was always in short, now it's back to always in long. That's the exact opposite of the bears, of what's going on. Bulls, think about the bull perspective. Let's pretend you buy up here, you scale in. Price is right back at your original entry. You're thinking, you know, thank goodness I can get out pretty much at break even and a small profit if I scale in. Are you going to take your profit and then buy 10 seconds later? No. It's clearly price rejected this price area. So why would you buy again down here? You know, on a trade range day, take the bear case. You sell down here. Are you going to scale in and then get out right here? No. You're probably, I mean, you are going to get out. You're not going to just hold, most likely. Especially after you see this. You're not going to, you know, well, you did get out here. It's not always in short. So, you know, what happened here? Double top. Why? Bulls took profits from up here. Bears knew that. They shorted. Everybody sold. There's your second leg. So leg one, leg two. You know, bears are gonna add on short here. They sold this close, they sell right here. So yeah, I mean, that's what creates it. So, you know, think about it. Trade range day, the opposite. Almost think of doing the opposite of what you think you should do. So when it gets up here, look to sell. When it gets down here, look to buy. But yeah, I know it's tough. It is. And I get that. So, well, in terms of where you're wrong, I mean, you had a top. It's a trade range day, probably a second leg down, but the pullback will be deep most likely. So I wouldn't say you're wrong, but I wouldn't sell down here. First trend line break as well. You probably need a double top. See, I think you were still always in long right here. Buy, scale in, get out. So yeah, I wouldn't say you were wrong thinking that, but you know, it's not a tip. I mean, I wouldn't say it's a tipping point. I would just simply say, you know, what I've been saying. Scale in bulls. They buy here, confident the price will come back, and scale in. Very often on a trading range day, you can buy or sell just about anywhere and scale in and probably make money. I'm sure you've heard Al say that. So, yeah, I hope it answers your question.